All right, ladies and gentlemen, we're back at it, bringing you another tips video. And in this tips video, we are going to be talking about how to trade the stock market using the supply and demand methodology. Now, I get a lot of questions. Usually I just trade forex, right? But I get a lot of questions from people trading stocks saying, "Hey, how can I trade stocks with this? Is it the same thing? Is there anything I have to change? Or hey, I noticed there's gaps every single day in the stock market. How do you trade supply and demand with all these gaps everywhere? What about fundamentals?" So these are all questions that I'm going to answer, okay? So let's start from the basics. There might be some people here that have not watched my YouTube videos before. So if you want to know more about the supply and demand methodology, what I want you to do is go to my YouTube channel, Moneyball Austin, go to playlist, and then you can watch the whole supply and demand methodology here. That we're not really going to cover, how to identify zones, how to read the price action, how to properly draw the zones, because I created a whole playlist for this, okay, talking about this exact strategy. And on top of that, if you wanted more on it, you could check out the free little course I offer too in the description below. But let's get straight into it. Now, first thing we have to understand is who's actually making these big moves in the market. So here we are looking at, what is this, Microsoft Corporation, so a technology stock, I believe. I don't know all the stocks and all the, what sectors they're all in or something like that. So I'm going to do my best with this. So here, if we look at Microsoft, we got to understand this is millions and millions and millions of dollars pushing the sell button from here all the way down to here. This isn't retail traders, right? Sure, there is retail trading happening in this whole thing, but most of the liquidity is coming from big money, right? So what we're kind of thinking is if the big money saw value up in here, this is where they want to be shorting their stock. They probably don't want to be shorting, down in this area or already down in here, right? The best value for their shorts are up in here where it's higher in price, right? I'm sure they would rather sell if, say, the owner of the company came, or the owner of the hedge fund came up to them and said, "Hey, we need to sell $20 million worth of Microsoft stock at 228." That person who has to execute the orders is going to do everything they can to make sure they sell up in here at 228 and above. Okay, because if they start selling and they just push sell on every single order, they sell, what did I say, 20 million? If they go off and sell $20 million worth of Microsoft, well, this thing's going to collapse just instantaneous, right? It's going to find the next stack of buy orders, right? So you got to remember, in supply and demand, we are looking for strong imbalances, okay? Notice how I didn't say balance. We are imbalanced traders, okay? For every buyer, there's a seller, right? If that continues on, prices are going to go sideways. Say, hey, I'm willing to buy at 219 and you're willing to sell at 219. Perfect. Prices are going to go sideways because that's what the market's at. But let's say Bilbo Baggins comes in and says, "Hey, I want to buy $1 million and just hit the buy button," right? Or sorry, 1 million shares at 219. Well, maybe there's not 1 million shares available, right? You might have to go all the way up into 232 to finally get all your million shares executed. Okay, so that's going to create a strong imbalance. That's going to create a strong rally in price. Okay, so that's kind of like the background of what supply and demand traders are trying to do, right? Like I said before, I'm not going to go into the whole methodology. I could sit here for about 4 or 5 hours and talk about the entire thing. This is only going to be a 10-minute video, so if you want to know more about it, what it is, how to identify the zones and all that, I strongly recommend you can ask me questions, or go through the playlist that I offer below, in the tips playlist. Okay, so the next common question I get is gaps. Gaps in the Forex market, they happen once every week when the Sunday market open happens. Okay, it's open 24 hours a day, 5 or 6 days a week, but then the stock market is only open 6 hours a day, 5 days a week, right? So there's opportunities for gaps every single day, and I'll highlight all these gaps. There's a little gap right there. There's two gaps in there. There's a gap in here. There's a gap in here. It's a big gap. Ooh, sorry guys, I just burped. I'm having a beer right now. I'm drinking some Miller Lite. Not Miller Lite, just regular Miller Genuine Draft. It's the black label one in a bottle. But those were all the gaps, okay? So those happen every single day. And a common question that people ask me is, well, how do you trade them? Well, what I'm going to say is if there's gaps, if there's like gap central and like every single day this thing is gapping 50 points in either direction and you can't even mark out supply and demand zones, then you shouldn't be trading a stock like that. Remember, as supply and demand traders, we're trying to get on the big side of the money, right? So we're trying to trade with the big markets, with the institutions, right? Their big money, not their retail money. The smaller cap stocks, they're really not trying to trade those. They're not trying to trade like the massive gaps every single day. Okay, they're trading more of the Dow 30, S&P 500 stocks because there's a lot more money, much more liquidity. They can't afford to be trading penny stocks. Okay, so if I'm going to be trading stocks, first things first, I'm sticking with the S&P 500 trades. Okay, I don't want to see gap central. All right. I want to see nice clean drops with not too many gaps. Okay. Now, the next question is, hey man, there's 500 stocks or 1,000 stocks or 10,000 stocks to trade from. How do you actually decide on which ones to trade and which ones not to trade? This is going to be kind of my filter. So how I'm going to filter through this is what I want to look at is the index. So if we look here at, say, we're looking at Microsoft. Microsoft is a technology company, correct? So what I want to do is I want to see XLK, I believe, technology. So what this is it is a sector, the technology sector. Same thing as FinViz. So here, technology, communication, consumer, healthcare, financials. It lists all the stocks inside the technology sector, in the healthcare sector, in the industrials, real estate, utilities, energy, all that, right? So Microsoft right here is one of the top dogs in the technology sector. Before I push sell on the Microsoft stock, I should probably be aware how the technology stock or how the sector of the technology is actually performing. Don't you think that's a good idea? Like, so if anybody's coming from forex, if you have the US dollar sitting inside a weekly demand zone, do you think it's a smart idea at going out and selling the US dollar? No, right? So it's the same thing here. What we are trying to do is just determine what market we should be trading in. So what I'm going to look at is first is, hey, how is the technology market doing? Is it like the number one performer of the year? Is it up 20%? Is it sitting inside a demand zone? That's perfect. That's what I want to buy, right? I want to make sure this is in correlation. So technology with Microsoft or Apple or financials with, I have no idea what these stocks are, but communications with Google or Facebook or Disney or Verizon or Netflix, right? Or consumer, which is Amazon, right? If you have the consumer index sitting inside monthly supply zone, you probably want to be selling the Amazon, right? So it's taking all the stocks in the consumer index and drawing them out on a supply and demand chart as in candlesticks. So if that's sitting inside monthly supply, as in where big money is coming in to sell, well then I probably want to be selling Amazon too. Okay, so same thing. Microsoft, here is my higher time frame daily supply zone up here. Here is my daily demand zone down in here. I want to be a buyer if and when prices come down here, or I want to be a seller if and when price comes up into here. Why? Because like we identified at the start of the video, this is a lot of selling coming in, right? So if and when prices come back up into this area of rally-based drop supply zone, a large stack of sellers are going to still be there. Maybe, maybe not. We don't know, but I'm going to take a probability-based chance and say yes, they will be. Same thing down in here. Notice the strong leg out. Strong leg out. This is a lot of buying coming in, buying coming in, buying coming in. I want to wait for prices to come back down into this area, and then that's going to tell me, okay, I want to start looking for buying opportunities. So with that said, let's actually do this. Microsoft, and let's go down to this index. This might be on a longer video, but trust me, if you guys are willing to stay for this, I think this will be great for you guys trading stocks. So here on Microsoft on the left is Microsoft, here on the right is the technology sector. It looks pretty identical, don't you agree? Here they are both on the daily time frames. Okay, let's scroll in a bit more. There we go. So exact same levels, right? Sure, it might look a little bit different, but these are the exact same zones. Rally-based drop, notice the same time. So if you look here on the left and on the right, this my little cursor, the exact same time price dropped is the exact same day that price dropped. So what we are doing is we're not just looking at Microsoft and saying, hey, it's coming up into supply, but hopefully if Microsoft comes up into supply, you will also have the index of the technology sector coming up into supply as well. That's the correlation that I would want to trade in the stock market. On top of that, I might want to consider the Dow 30. So if the Dow 30 is sitting inside, I don't know, daily demand or 1 hour demand, like say this was a 1 hour time frame and price came down, I want to see the Dow 30 in this demand. I want to see the technology sector inside this demand, and I want to see Microsoft in this demand. So I'm creating a filter for myself to make sure that I'm trading the best trading opportunities. Do you guys understand? Perfect. Okay, and that basically sums it up. So basically, I want to recap kind of everything we talked about. So if I'm going to be trading the stock market for trading supply and demand, the type of trading that I'm going to do is I'm going to get in and out of positions before the end of the day. So taking 1 minute, 5 minute trading opportunities, or holding my trade more long term. I personally wouldn't want to hold my trade for 2, 3 days, right? I wouldn't want those to be my ideal trades. I would want to be day trading these things, getting in and out of positions because of the gaps. Okay. Okay, the second thing is making sure that the stock you are trading is actually lining up with the technology or the sector that you are trading, right? This is that correlation trade. This would be the fundamental for me. This is the number one thing I would do first, saying I ain't selling this Microsoft stock unless prices on the index are also coming up into supply. Now, like what we talked about before is also consider the Dow 30, or the S&P 500. If prices are inside, say, a 1 hour demand zone on the Dow 30 or the S&P 500, I probably want to make sure that the technology sector is also coming into 1 hour demand, and the Microsoft is coming into 1 hour demand as well, right? So if we look at, let's go back to FinViz. What's another one? I don't know, communications, Google. I don't know what sector that is though. Google, Goo, isn't it Alphabet? Alpha? I have no idea. Google. What is it? Okay, yeah, Google. Okay, there we go. And then what is their? They are communication, really. So we got materials, healthcare, technology, real estate, industrial, communication, right here. So let's look at the daily time frame. Oops. Communication, GOOGL. Okay, so there we go. Daily time frame. These look pretty identical, don't you agree? Right? You still have this area of supply, which is the same zone as this. You have the same zone as this and this, right? So what I want to see before I look at actually looking for selling opportunities in here is I want to make sure that this personally goes up into here. Or sorry, the index, the sector goes up into that supply zone as well. Okay, so if you guys wanted these little sector indexes, have a look at them. I think they start from here, XRT, down into XLU. There is utilities, uh, consumer, discretionary, don't even know what that is, trust financials, energy, healthcare, right? So there's everything in there. Like I said before, I would use this to trade S&P 500 stocks or the Dow 30 stocks. I wouldn't necessarily go and trade penny stocks. I've never done it, but you got to understand the whole supply and demand theory is based off of big moves in the market and trading with the big orders, right? It doesn't take a lot of money to move these penny stocks. Sure, it might take a lot of money, $20,000, $30,000 to move a penny stock. That might be a lot of money to some people. But when we're trading Google, Alphabet, Amazon, hundreds of millions of dollars are transacting in these stocks every single day. Okay? So those are the ones that you want to be trading. Tesla, same thing, right? Sure, those are bigger stocks, like $60. If you have a small account, you probably can't afford something like that. So maybe trading an S&P 500 stock that's maybe around $5, $10, um, I don't know, $20, right? Something on the lower end. Okay. So like we talked about before, we are looking for these strong imbalances to the downside or to the upside. I don't want to get too much into the methodology here, but if you want to know more about it, everything that we just went over in this video right now, going over stocks, is you can take that base knowledge, but also watch the tips playlist. What is supply and demand? How to identify the zones? We briefly went over this concept. How is price action? What is confirmation? Everything that I do trading supply and demand, I trade it in all the same markets, right? So I kind of just wanted to talk to you guys that are trading stocks and that had those questions about how to trade supply and demand and how price moves, right? There's a lot of theories out there about, oh, price moves due to support and resistance, or somebody just pushing buy, or Elliott wave theory. I don't know all these things. EMA crossovers, RSI, I have no idea. But what we can agree is large orders move the market. Okay, and all we are trying to do with the supply and demand methodology is identify those zones of where price is moving and trade with them when price comes back into the zones. Okay, I have a whole tips playlist I would like you guys to check out if you haven't checked it out, right? Entry stops, everything could be the exact same in the stock market, except I would add those little tips that I recommended into the stock market, right? The gaps. Don't trade markets that are just gap central, right? Trade the liquidity ones, the ones that the bigger money is playing at, the S&P 500 stocks. Don't trade gaps. Look for strong imbalances. Use the filter that I recommend. I would do day trading instead of like 1 to 2 day, 3 day holding. I would either do day trading or long-term holding, right? If I'm going to be long-term holding a stock, I'm going to make sure that, man, this stock better have good fundamentals as well, right? But if you're just day trading, scalping, sure, you might want to consider that. Um, I personally wouldn't look too much into it. I would really want to make sure I'm trading the supply and demand zones, okay? Besides that, everything would be the exact same top-down analysis. It's just the difference of day trading and how I'd manage the gaps and my filtering, what I would do, okay? So I'm going to let you guys go with that. If there's any questions, I haven't talked about stocks before in this supply and demand methodology. If you guys have any questions, I might redo the video in a year from now because I learned some new stuff. But if you guys have any questions, let me know. Okay? Have a good one. If you guys wanted more of that tips playlist, check out the tips playlist. I will link that down below. And then if you guys wanted that free little mini course about the whole tips playlist, basically combined into a couple of videos, then I cover that in the free training. Okay? Have a good day. Have a good weekend. And enjoy a couple of beers. All right? Cheers, guys.